The SEC has officially been sued for hiding information? How is this relevant, and how is this going to impact the case and prices of XRP? Stay tuned to find out. But first, we are giving away 50 XRP at the end of the month to one random subscriber to start on their XRP journey. All you need to do is to like the video, subscribe, and comment your thoughts on XRP in the comment section. Welcome, XRP Army. Let's grow the XRP Lab community by pressing the like button and subscribing to this channel to stay updated at all times. Before we go through the lawsuit filed by Empower Oversight, let's go through some tweets to understand what's going on in and around the crypto sphere. At Crypto Law US tweeted, agency won't comply with all FOIA requests from August. At Empower_us asks judge to force compliance. At SEC Gov only complied with 2 of 8 requests, saying no records exist showing the SEC Ethics Office ever contacted over Clayton employment with One River, or Mark Berger going to Simpson Thacker. It appears, at least on some level, like they are attempting to cover something. John E. Deaton caught this and retweeted it by saying, "What is the SEC hiding? There is no deliberative process privilege that can be claimed related to these documents. There is no attorney-client privilege that applies. So how can you claim any form of deliberative process privilege if there was no policy on handling crypto, XRP, Bitcoin, or Ethereum? It's been clear for 75 years through the Howey test. It doesn't make sense." Now, this tweet will blow your mind. Charles Gasparino from Fox tweeted that, at SEC Gov now arguing it has not officially declared $BTC $ETH compliant cryptos, according to testimony in the SEC vs at Ripple. That appears to be a 180 from not just Bill Hinman's speech, but the regulatory approach of former Chair Jay Clayton. At Gary Gensler Spox has declined comment. More at Liz Klarman 3:45 p.m. at Fox Business and at Ethereum and at Bitcoin. Ripple has filed an updated response to the Securities and Exchange Commission's brief about the supposedly privileged papers, which will be evaluated by Judge Sarah Nett Burns soon to determine if the materials are privileged or not. The defendants, led by attorney Matthew C. Solomon, argue that there is no deliberative process privilege, DPP, because the Securities and Exchange Commission has never deliberated on digital asset regulation. The argument is being made in response to the SEC assertion that senior employees, including ex-SEC Director William Hinman, were merely offering their own thoughts and not representing the SEC in any decision. The revised response was filed a week after Ripple requested the addition of 3 documents that the defense found to be extremely relevant, particularly the third, which is an email chain relating to discussions with a third party who, according to defendants, received guidance from the SEC to analyze its digital asset under the framework set forth in Director William Hinman's June 14, 2018 speech. The paper could establish that Hinman's statement was not just a personal opinion but official SEC policy. This has been a major point of contention in the litigation. The SEC sent an email to a third party telling them to analyze a digital asset using the factors in the Hinman speech, which speech was just his personal opinion. "I understand now, it's the SEC that needs clarity," Jeremy Hogan, an attorney, remarked on the agency's inconsistencies. If Ripple wants to claim the SEC misled about the nature of its deliberations, the above-mentioned document could be the proof he needs. Now let's go back to the lawsuit filed by Empower Oversight. Empower Oversight has filed a lawsuit against the Securities and Exchange Commission SEC to compel SEC to respond to various Freedom of Information Act requests concerning potential conflicts of interest by former high-ranking employees and the SEC supervision of cryptocurrencies. Empower Oversight filed a detailed FOIA request with the Securities and Exchange Commission in August, requesting any cryptocurrency correspondence between senior SEC employees and their current and former companies. William Hinman, a former senior SEC employee, was paid millions of dollars by his previous firm, Simpson Thacker, to advise the SEC on cryptocurrency regulation. Simpson Thacker is a member of an organization that supports the cryptocurrency enterprise Ethereum. Hinman stated that Ethereum was not a security, causing its value to skyrocket. The SEC later sued the developer of another cryptocurrency, XRP, alleging that it was a security, causing XRP to lose a quarter of its value. Mark Berger, the lawyer who filed the complaint against XRP, departed for Simpson Thacker shortly after Hinman did. Finally, when former SEC Chairman Jay Clayton declared that Bitcoin was not a security, he may have had conflicts of interest. Clayton left the SEC to work for One River Asset Management, a cryptocurrency hedge firm that only worked with Bitcoin and Ether. The SEC has so far ignored 6 of the 8 categories of documents in Empower Oversight's FOIA request. According to the SEC, searches for 2 of the 8 categories turned up no documents relating to conversations between Mr. Clayton and the SEC Office of Ethics Counsel about future positions and potential recusals. The remaining 6 petitions have yet to receive a response. As a result, Empower Oversight filed a case in the United States District Court for the Eastern District of Virginia, seeking that the Securities and Exchange Commission reply to the remaining 6 categories of the FOIA request. Empower Oversight is represented by Hush Blackwell, and the SEC is charged with failure to comply with statutory deadlines in violation of FOIA, 5 U.S.C. and unlawful withholding of agency records in violation of FOIA, 5 U.S.C. Since its founding in July of this year, Empower Oversight has filed 2 FOIA lawsuits. While waiting for the SEC to meet its FOIA duties, Empower Oversight had earlier fought an erroneous SEC ruling that had placed additional expenses on the FOIA request, eventually securing a fee waiver for the requests based on being a media requester. Before we end, let's take a look at XRP price on December 11th. Ripple's XRP coin has been the subject of a flurry of negative headlines, including a lawsuit filed by the Securities and Exchange Commission, the SEC, to reclassify XRP as a security. Analysts and industry insiders, on the other hand, have recently begun to take a more positive perspective of the token's risk and reward, as hope builds that the issue will be decided soon. As Ripple approaches a critical line of support, the price of XRP is at the risk of plummeting even worse. If momentum does not shift to the upside, slicing below the crucial line of defense might lead to a 38% drop in the token's price to 49 cents. As the cryptocurrency has continued to consolidate, the XRP price has formed a parallel channel pattern on the daily chart. Ripple is approaching the lower boundary of the dominating technical pattern, which provides significant support at 80 cents. If the token falls below the aforementioned line of defense, its value will likely plummet. The present chart pattern indicates a 38% drop from the negative trend line, signaling a 49 cents bearish target. The XRP price will find multiple zones of support before the bears attempt to drive prices down to the pessimistic target. The 76 cents low on August 9th will be Ripple's second line of defense. Additional support will be found at 60 cents, the multi-month ascending support trend line, and then at 65 cents, the July 12th high. An increase in selling pressure could bring the XRP price down to the June 25th low of 58 cents, then to the 78.6% Fibonacci retracement level of 55 cents, before Ripple hits the parallel channel's anticipated bearish goal. If the XRP price can stay above the bottom limit of the dominant technical pattern at 80 cents, Ripple may be able to negate the bearish prognosis by regaining higher levels, starting with the 61.8% Fibonacci retracement level at 85 cents. The 21-day simple moving average, SMA, at 93 cents, followed by the 200-day SMA at 95 cents, may be targeted if there is a rush in purchase orders. The initial target will be $1.02, which intersects with the 50-day and 100-day SMA, followed by the 50% retracement level at $1.06, which intersects with the 50-day and 100-day SMA. What do you think about all these? How will all of this be going to impact XRP price? If you want to continue to know about XRP, we have got 2 more videos waiting for you on the end screen to check out. Make sure to subscribe and give us a thumbs up. Also, leave us a comment in the comment section to let us know about what you feel will be the future of this cryptocurrency. Thank you so much for watching. See you in the next video. Before heading forward, kindly note that prices of cryptocurrencies frequently change, so by the time you watch this video, it might have changed to a whole new value. The information provided in this video does not constitute investment advice, financial advice, trading advice, or any other sort of advice, and you should not treat any of the content as such. The content in this video is for educational purposes only and hence should not be considered as financial advice. Do conduct your own due diligence and consult your financial advisor before making any investment decisions.